Exponentially weighted historical volatility in Excel, volatility analysis in Excel. Historical volatility is a useful measure to gauge market uncertainty. Recall that. In finance, volatility, usually denoted by sigma, is the degree of variation of a trading price series over time, usually measured by the standard deviation of logarithmic returns. Historic volatility measures a time series of past market prices. Historical volatility is usually calculated by using the simple moving average of the historical returns. This approach works well when the market is in a normal condition. However, when there is a shock in the market, volatility increases and the equally weighted historical volatility starts revealing its drawbacks, i.e. 1. Historical volatility is not responsive enough to the increase in volatility. 2. When the market stabilizes, the past volatile period still stays in the sample and is assigned an equal weight as the most recent period. 3. When the volatile period goes out of sample in the calculation of historical volatility, we suddenly experience a drop in volatility that is not caused by changing market fundamentals. The picture on our website illustrates the above points. The blue line depicts the 3-month equally weighted historical volatility of SPY. As we can observe from the figure, when the SP 500 went down in early March of 2020, the implied volatility went up, but the equally weighted volatility was lagging. It started going up only a week later. By mid-June, the market started stabilizing, but the equally weighted historical volatility still exhibited a high value. And finally, the equally weighted historical volatility dropped abruptly at the beginning of July. To remedy these problems, one can use the exponentially weighted historical volatility that assigns bigger weights to the recent returns, and smaller weights to the past ones. It is observed from the figure on our website that the exponentially weighted historical volatility, red line, is more responsive than the equally weighted historical volatility. Also, the decline of the exponentially weighted historical volatility from its peak is smoother than that of the equally weighted volatility. The equally and exponentially weighted historical volatilities were implemented in an Excel workbook. Go to our website to download the Excel workbook.